that. All right, so let's get started. Good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for January 31st, 2020. Q's down 1.6%, SPY 1.8. Something that I should have probably made note of yesterday, more apparent, is that there was a little bit of divergence in the relative weakness of the SPY yesterday, and that the SPY actually on the follow through of the daily sell setup, gapped down and came in right to target. And so we're seeing more of that relative weakness. Now, we did notice kind of yesterday in the pre-market that the Qs were gapping up, but they did eventually lose a bit of that gap. And then actually, as soon as we got the open, came right in. Now, I was looking for above this area for the Qs to go back to bullish. SPY didn't even get there, and that's, I think, as a result of the relative weakness we saw. So it did poke above and then get rejected right away. So that put the daily sell setup kind of back in play here. Okay, so even though I was looking for a break of that, to initiate a bullish bias, it immediately got sold. We saw that a lot with a lot of the gap ups today as well. That got sold along with the market. So right now, in the short term right here, we are going to be looking for continuation of lower prices. That means base breakdowns, rallies, I expect to get sold. Okay, so what I thought was also interesting about this week, and sometimes, the answer is kind of staring at us in the face and we don't always know what to make of it, or, what is going to come of it. But I did mention that we had a lot of things gapping to support or even basing at support and breaking down, continuing through the support. Just took a little bit of consolidation and then they cut through it, right? And if that's the case, that's going to be more indicative of a bullish market, or sorry, of a bearish market, right? Because we've been in a bullish market and we've seen time and time again things gap up to resistance and break through it. And we even played some of that ourselves, like on the TDOC, the TCO, I believe. TDOC was a play a couple weeks ago. TCO, we played this one short and played it as a break of the support. So, we've seen more of that. And then on the flip side, unfortunately, some of these gap ups that I was expecting to get to the resistance or even break through the resistance. Today I did give a shot on the CL here. CL, I thought it was an okay gap, a little bit too far and into resistance. Wanted to see it at least get closer to the all-time highs. Thought that we may, get somewhere closer to 76. If we broke above it, that would be even nicer. But, and wasn't able to get follow through, despite the fact, we had some shock value in this gap. So, what I saw this week is consistent with the bearish bias that we're going to be carrying into Monday. So kind of the second week in a row here, ending the week expecting bearish, having a bearish bias going into the weekend here. Okay, so last week we noticed the hourly uptrend broke. We started off with a gap down, pretty decent recovery on the move up. Now throughout this move up, right, wasn't bullish. I wasn't expecting necessarily the bounce. I wanted to see what was going to happen. And I wanted to see once we got some kind of selling, right? And here's the SPY. Once we got some kind of selling, I would have some place to use as a reference point, right? Once we've shown that resistance where sellers are willing to step back up, which essentially was a closure of the gap over the weekend, right? That would be a good place to start to use, as if we get back over that, then we're resuming the uptrend. So you can see here, we did try to rally, not able to get back and over it, and now we're back down here on the SPY. So that relative weakness on the SPY, kind of telling. The stuff that we played this week also, I mean, I had a much better time with the shorts this week than with the longs. And so kind of all of that kind of culminating into this bias, into this, expectation for next week. Okay, so I think we're going to run. We have hit some support here, which is why I'm not saying first thing Monday morning, just short everything. But rallies and base breakdowns, I will expect to follow through. And I expect the rallies to be shortable opportunities. Now, as far as what we got on the longer term chart, you can see the daily here is starting to break because we actually got a higher low here and we're starting to lose it. So the daily is starting to weaken. The weekly, of course, is still in an uptrend. We're going to need more time, right, for this to show us. If it tries to bounce and fails on that bounce, we can go to a bearish bias on the weekly, and then the monthly is gonna have to follow after the weekly, right? So, it's, for me, it's not really that indicative that we've topped out, that the uptrend is over. So, it wasn't the kind of thing that I was asking for, which was for, throughout this grind, I was saying either we get really accelerated, we see really big green bar, some of the biggest green bar on the chart here, and maybe that's, a blow off top, or we get some really damaging gap down and just absolutely obliterates, most of the trading here, and now all these people that were up in here, are trapped, or essentially the market ends the uptrend, right? We didn't get either of those things, right? So what we're gonna have to do, we'll take it kind of day by day, follow the hourly trend, okay, which ended up being kind of the right kind of cue here on the SPY, because as soon as we broke this pivot, right, the SPY really has not been able to resume the hourly uptrend. All right, 20 MA is a good kind of approximation for that. You can see the 20 MA did flatten out a little bit because of that strong retracement, but never really pointed up. So, but for the Qs, it was a little bit different because the Qs did show some relative strength and did kind of pop above, but that was soundly rejected right away. So, kind of peaked above and then got kicked right back down. So, gonna be bearish bias going into Monday. All right, now we're still in the absolute thick of earnings season, so there'll still be lots of trading next week. So, we'll still be focused on that, but I think we will have the added component of perhaps a more bearish market than we've had in months. And so that'll be really interesting, but will also help guide our focus, right? This week, as you saw, shorts worked really, really nicely. Gap downs, the follow through on the gap downs were really, really good. So that'll also help guide us next week as well, using the market bias and kind of keeping all the components here in alignment, because you don't want to be trading in a vacuum. And so you can't, while we're always looking for things on their own page, especially kind of after the initial opening movement, the market definitely has its effect. Okay. All right. So hope you did well this week. And if you joined us for the open house, hope you enjoyed your time with us. Hope you got to take some of the plays and make some money as well. We'll be back at it on Monday, and I hope you have a nice weekend. I'll talk to you on Monday.